Hello, and you're welcome to Global Business Insights, where from a global perspective, we discuss ideas, answers, and insights on questions in the fascinating places where finance, business, and culture meet. Nigeria's inflation rate rose as widely expected in September for the first time in 3 months, up to 32.7% in annual terms from 32.15% in August. We will discuss the data and the outlook. Industrial output in the Eurozone rose by 1.8% month on month compared to the expected increase of 1.8% and a minus 0.5% print in July. Industrial production also increased at an annual rate of 0.1% in August versus July's minus 2.1%. The market consensus was for minus 1% growth in industrial production. Also, some good news from the Eurozone. The headline German ZEW Economic Sentiment Index improved to 13.1 in October from 3.6 reported in September, beating consensus of 10.0. Investor confidence improved for the first time in 4 months on the prospect that borrowing costs will fall more quickly than previously anticipated. The ECB also set to further cut rates as inflation reads come in lower than expected. Also today, the United Kingdom's ILO unemployment rate eased to 4% in the 3 months to August, following July's 4.1% reading and better than 4.1% market forecast. UK wage growth fell to 4.9% in the 3 months to August from 5.1% in 3 months to July. Analysts also see another rate cut by the Bank of England when they meet at the next Monetary Policy Committee meeting. Volatile oil prices eased for a third session after Israel said it may avoid targeting Iran's crude infrastructure, also as the International Energy Agency projected a weak market next year. Brent crude at about midday GMT was at $74.50 per barrel. There seems to be little to slow the rally on Wall Street, with the U.S. economy and corporate earnings looking positive. The Federal Reserve lowering interest rates, bank earnings continuing to be better than expected, and futures, we can see them rising as earnings were announced, all pointing to a positive open. That's for Wall Street. Bank of America announced 81 cents per share, earnings that beat estimates, also on better than expected trading revenue. Goldman Sachs also beats on profit and revenue as trading and investment banking boosted its results. Citigroup also beat on earnings and revenue. Citi earnings per share at $1.51 exceeded $1.31 expected on revenue of $20.32 billion, which was higher than Wall Street estimates of $19.84 billion. Saudi Export-Import Bank has signed a $25 million credit agreement with South Africa's Standard Bank Group to facilitate trade between the two countries. The deal will support export of Saudi Arabian goods to Africa, and Saudi Export-Import Bank also signed an agreement with Absa Group. Bank of America reported net income of $6.9 billion. Earnings per share reported of $0.81 per share, better than 77 cents per share expected. Revenue improved year on year to $25.49 billion, beating $25.3 billion expected. Net interest income of $14 billion by Bank of America was 3% lower than Q3 2023, as higher net yields and loan growth were more than offset by higher deposit costs. Provision for credit losses of $1.5 billion was flat compared to second quarter 2024 and up from $1.2 billion in third quarter 2023. Chairman Brian Moynihan said Better net interest income compared to Q2 was complemented by double-digit year-on-year growth in investment banking and asset management fees, and that helped the performance in the third quarter. Goldman Sachs profits surged 45% from a year earlier to $2.99 billion. Earnings per share at $8.4 per share was better than $6.89 per share. Revenue climbed 7% to $12.7 billion, better than $11.8 billion expected by Wall Street. For Citigroup, earnings per share of $1.5 decreased from 1.63 per diluted share in the prior year period, reflecting the lower net income, but still coming in higher than $1.31 per share expected. Citigroup's profit also fell 9% in the third quarter as it set aside more money to cover for bad loans, particularly on credit cards. CEO Jane Fraser commented that while the bank continues to make substantial investments in its transformation, the efficiencies gained from simplification and other efforts drove a 2% reduction in expenses. Citi is also seeing the positive impact of the changes implemented in its wealth business, with revenues up 9%, including strong growth in client investment assets and investment fee revenue. Citigroup, Bank of America, and Goldman Sachs, their stocks, if you look at pre-markets, they were expectedly higher. The Fed easing rates means lower interest margins for lenders, but it also encourages corporations waiting on the sidelines to acquire competitors or raise funds to begin to move forward much earlier than initially planned. Asset management could benefit from rising asset values across markets as rates decline. Last week, JP Morgan Chase reported strong results from trading and investment banking, and Wells Fargo exceeded estimates, also helped by its investment banking arm. In September 2024, the Nigeria headline inflation rate was 32.7%, slightly higher as expected by more. In September 2024, the Nigeria headline inflation rate was 32.7%, slightly higher as expected by most analysts than the August 2024 headline inflation rate of 32.15%. On a month-on-month basis, the headline inflation rate in September 2024 was 2.52%, which was 0.3% higher than the rate recorded in August. That was 2.22%. On a month-on-month basis, urban inflation rate was 2.67% in September 2024. That's higher when you compare with August's 2.39%. Month-on-month rural inflation rate in September was 2.39%, also higher than August's 2.06%. The food inflation rate in September 2024 was 37.77%. That's on a year-on-year basis, higher than the rate recorded last year, September 2023. That was 30.64%, and higher than 37.52% that was recorded in August 2024. Core inflation, which excludes the prices of volatile agricultural produces and energy, stood at 27.43% in September 2024 on a year-on-year basis, up by 5.59% when you compare to the 21.84 recorded a year ago, that's September 2023, but notably slightly lower than 27.58% in August 2024. Factors contributing to higher inflation included the depreciation of the naira and the increase in fuel prices since early September. Severe flooding in food-producing areas compounded the familiar supply chain challenges, resulting in higher food prices, which accounts for the bulk of Nigeria's inflation basket. Haulage and passenger fares spiked up in early September after gasoline prices were increased 45%. Floods in the north also destroyed crops that would have fed 8.5 million people for 6 months, according to the United Nations Food and Agriculture Organization. Infrastructure damage from floods included 6 collapsed bridges in the northeast, severely affecting supply chains in the region. Like I said in an earlier chat, without bolder actions to confront root cause and structural factors, monetary tightening efforts tend to yield little. Structural issues include low productivity, worsened by a massive infrastructural deficit, high inflation expectations, high insecurity issues, compounding supply chain issues in farming communities, and most importantly, undisciplined government fiscal practices. The central bank governor at the last MPC briefing said tightening will continue as long as inflation remains high. The drop in core inflation is a good sign that they may be soon at the end of their tightening cycle, which has been very painful for industry. Asia-Pacific markets were mixed overnight. Chinese stocks were lower as markets awaited more details and government stimulus plans. Well, that's it from me on this episode of Global Business Insights. This is Bode or Shosami. Thanks for sharing and following. Again, thank you so very much for watching. Bye-bye.